Hey everyone, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please be sure to follow and leave a 5-star rating. Okay, folks, let's kick it off with some news from Harvard. So Harvard Endowment has reduced their stake in Bitcoin ETFs and added exposure to the Ethereum ETF. This is a very interesting move. So they haven't completely dumped their Bitcoin ETFs. It's just that they're reducing that side of it and going into an altcoin, which is Ethereum. This is very interesting, especially in the context of what I've been reporting recently of BlackRock investing in Uniswap, buying the tokens, moving their money market fund on the decentralized exchange, but Uniswap's token is considered an altcoin. And you have Citadel investing Layer 0. Yesterday, we talked about Apollo investing in Morpho tokens, another altcoin. So something interesting is happening here, and it could be there's going to be a big narrative around DeFi and altcoins as Bitcoin. Let's say, for example, the relief rally we're looking at that may be coming very soon, altcoins could outperform Bitcoin. So Ether, XRP, and others could outperform Bitcoin, but we're going to have to wait and see. There's no guarantees there, but nevertheless, these are some very interesting moves. So let me give you the details. The Harvard Management Company, which manages the university's endowment, has reduced its stake in BlackRock's spot Bitcoin exchange traded fund and opened a new position in the asset management company's Ether ETF. In a Friday filing with the SEC, Harvard's endowment reported that it had reduced its positions in the BlackRock iShares Bitcoin ETF to $265.8 million as of December 31st, down from $442.9 million in Q3 of last year. The investments mark the company offloading more than 1 million shares of the ETF to 5.4 million in Q4 from 6.8 million in Q3. But in this reduction, they have added exposure or purchased more than 3.8 million shares of BlackRock's iShares Ethereum Trust, valued at about $87 million as of December 31st. So very interesting move here. And again, they're not completely reducing their exposure to Bitcoin, but just updating their portfolio, diversifying a bit. So this is very interesting. Now, moving ahead, tokenized RWAs climb 13.5% despite the $1 trillion crypto market drawdown. So despite the crypto volatility in the bear market, the building continues. And this is why I'm macro bullish, guys. All of the major institutions, the banks, the stock exchanges, the payment companies are all building. But remember, markets are cyclical, right? So a lot of building usually happens in the bear market. So it's very good to see this. And I've been saying that I believe once the crypto market structure bill is passed, and then we enter into a bull market phase again, we're going to see the super cycle. And I honestly believe that. I'm not saying that to hype you guys up, but seriously, look at the adoption we're getting. And once you have legislation, that's going to unlock a lot more innovation, plus a lot more capital to be invested. So demand for tokenized real-world assets continued to grow over the past month, even as broader cryptocurrency markets faced heavy selling pressure, underscoring the sector's resilience and growing institutional footprint. The total value of on-chain RWAs increased to 13.5% over the past 30 days, according to data from RWA.XYZ. The increase reflects both higher asset issuance, meaning more tokenized securities brought onto public blockchains, and growth in the number of unique wallet addresses holding these assets, signaling expanding participation. As of February 16th, all major blockchain networks tracked by RWA.XYZ recorded increases in tokenized asset value, led by Ethereum with roughly $1.7 billion in net growth, followed by Arbitrum at $880 million and Solana at $530 million. The figures refer to the increase in total on-chain value of tokenized assets issued or circulating on those networks. By the way, folks, bookmark this site, rwa.xyz. That's where you can go look at many different blockchains like the ones mentioned, even the XRP Ledger and Cardano and others, right? So you can see what's being built, and that's updated on a daily basis. So this is really great data and really great to see building is continuing to happen. Again, despite the price conditions that we're in right now. And here's another example. Citibank is quietly building its crypto wealth business. So here is another LinkedIn job post from a major institution. Yesterday, we talked about Charles Schwab, and they're looking to hire people to build out their stablecoin business. And here, Citibank has the title or the job title as Wealth CIO, Digital Assets Specialist, Senior Vice President. So all of these institutions are hiring the respective talent to build out their divisions in this segment of their business. Folks, that's a huge tell, right? So they're not just giving lip service here. They are seriously looking to build. And we're seeing a lot of news, they're going to launch their stable coins, custody, and all these things, but you need the talent. So this is why, again, I'm macro bullish, because these things are still being set up. So what do you think is going to happen as all of these institutions start building on public blockchains? Because we know public blockchains is the way, right? That's where the settlement happens. That's where the liquidity is. JP Morgan and some of these folks who tried to build the walled gardens have learned their lessons. And even if they keep those private permission chains in-house, they have to bridge to the public chains. So the mandate spans product strategy, commercialization, and client engagement as crypto moves deeper into private wealth. So we are going to see this type of activity skyrocket once the crypto market structure bill is passed. Okay, moving ahead, Wintermute launches institutional tokenized gold trading, expects market to reach $15 billion in 2026. So we know all assets are going on chain, guys, right? All the major asset classes, precious metals, stocks and equities, real estate, and gold, it's a big one. They're going to have tokenized silver as well. So now Wintermute, which is a market maker, and many of you in the crypto industry may know of Wintermute, now offering tokenized gold. Guys, the future markets, economies, and governments will all run on blockchain rails. So Wintermute has launched the institutional OTC trading for tokenized gold products such as PAXG and XAUT. Wintermute CEO Evgeny Gaivoy, if I'm saying that right, projected the sector could expand to 2.8x to $15 billion in 2026, even as broader markets remain subdued. So this is what you want to see, right? The infrastructure being built around RWA tokenized assets. And again, these things are being tokenized on public blockchains, right? So, and you can obviously utilize these tokenized assets for different things. I'm waiting personally for when they open up DeFi, where you can do certain borrowing and lending around them, and you can do that globally. So I think that's going to be the big value proposition that a lot of people are going to take advantage of. Folks, this episode is brought to you by VeChain. VeChain is one of the top layer one enterprise blockchains in the industry, getting a lot of adoption. I am a VET token holder. I have been for many years. I'm bullish on this project. They are working with Dana White in the UFC. Last year, Dana White said he bought $1 million in the VET token. They are working with companies and brands such as Boston Consulting Group, Walmart China, BMW, PwC, and many, many more. And many different enterprises are using VeChain's blockchain to build really cool ecosystem or Web3 ecosystem items, where it includes rewards for example, doing environmentally safe things and staying healthy and exercising and so forth. So it's really cool. And I think these type of initiatives are the future, where people are going to be rewarded with tokens and participate in ecosystems and be incentivized to do so. So check out VeChain, guys. Again, I am a token holder, and you can also stake the token on Stargate. So if you'd like to learn more, go to vchain.org. Link will be in the description. Okay, now here's some good news. Crypto services platform Nexo relaunches in the United States. So Nexo, they had exited the US in 2022. That was under, the very hostile environment with Gary Gensler and much more. And I don't blame them for leaving, right? That was a hard time, and a lot of companies were getting sued. So they said, now citing improved regulatory clarity for digital assets in the US, the rebooted Nexo platform will offer flexible and fixed term yield programs, a spot cryptocurrency exchange, crypto-backed credit lines, and a loyalty program for US users. Nexo's head of communications, Eleanor Genova, told Cointelegraph. So this is really great. More options, right? Competition is healthy, and it helps the consumer to have more options. And so I don't recall using the Nexo platform, but I remember, hearing of them during the early days of crypto. So really great that they're back in the US. Now, OKX Exchange secures an EU payment license to expand stablecoin services. So the race is on amongst all these crypto platforms and exchanges to get as many licenses as possible to set up shop across the globe because it's a race, right? Everybody wants to get as much market share because we are still in the early innings of the adoption of blockchain and crypto. So OKX has obtained a payment institution license in Malta, the company told Cointelegraph on Monday. The authorization is issued under the European Union's payments framework and is designed to bring OKX's payment products into line with requirements under the block's Markets in Crypto Assets Regulation, or the MiCA regulation, and the Second Payment Services Directive. So big news here for OKX Exchange. And here's another example. Animoca Brands secures Dubai crypto license to expand services in the Middle East. Now, many of you may recall I interviewed the founder and CEO of Animoca Brands, and that's Yat Su. Very, very brilliant man. And I always enjoyed speaking to him. And Animoca Brands is huge in the Asian markets. They're one of the powerhouses in crypto, making huge investments in blockchain and crypto tech. And here, getting their licenses, expanding. So very, very bullish. And look at this. Hong Kong regulator approves first crypto company license since June. So they granted the license to Victory Fintech. Never heard of that. There are now 12 approved platforms on the Securities and Futures Commission registry of approved crypto firms. So we are seeing across the globe, they're not banning crypto, putting the guardrails in place, putting the rules and regulations, giving companies licenses that meet a certain standard, right? Because we don't want people to also go around scamming people. Remember Celsius, remember FTX, right? We need to have regulated institutions. However, there's a balance there, right? Because here in the United States, we're still trying to find that balance. Banks want to stop stablecoin yield. They also don't like DeFi, but we got to find a balance. And I think we will. We just have to be patient and let all of this set up. And again, this is all setting up for that super cycle, right, guys? So just be patient and make sure you have the macro view. Final news item here. Germany's central bank president touts stablecoin and CBDC benefits for the EU. Again, the future economies, markets, and governments will run on blockchain rails. And you're seeing the narrative being flipped here. And look, CBDCs are going to be a part of it. I'm not saying I like CBDCs or I endorse it. Just this is the nature of the beast. Here in the United States, there have been steps or certain legislation put into place to try to stop CBDCs. But one could argue stablecoins almost do the same thing as CBDCs, but that's a conversation for another day. But other countries are going to push for CBDC. So you and your respective country, wherever you're listening from, need to then make sure you watch this closely and push back if needed. If there's things that are draconian that will take away your privacy and much more. So the president of Germany's central bank, I'm going to butcher his name, Joachim Nagel, if I'm saying it right, supported the introduction of a euro-pegged central bank digital currency and a euro-denominated stablecoins for payments. In remarks prepared for a speech at the New Year's reception of the American Chamber of Commerce in Frankfurt on Monday, Nagel said EU officials were working hard toward the introduction of a retail CBDC. Euro-denominated stablecoins, according to the central bank president, could also contribute to making Europe more independent in terms of payment systems and solutions. So, again, do you see the direction the puck is heading here, guys? The token economy, despite the bull and bear market cycles, it's still being built, it's still being established. And, maybe by 2030s, once we have all the legislation in place, maybe that is where we see that super cycle, right? But nevertheless, just like the internet and other technologies, they're embracing it, they're regulating it. The tax man's going to take his cut, of course. There's going to be a lot of jobs created out of this. The big institutions are building with the public blockchains, and that's where you want to look at which blockchains are getting adopted and hold those respective tokens. So folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Be sure to subscribe to my free email newsletter. It is 100% free on Substack. Today I put out a write-up. Be sure to check it out. I put a lot of chart data in there, guys. Again, it's free. You don't have to pay anything. So check it out. And also grab a copy of my book on Amazon. It's available in paperback and digital. And check out my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.